Hey everyone, I received a comment on my painting that they couldn't see the painting in one of my videos, so ta-da, there it is. I painted it a while ago. I talk about it in one of my earlier videos. But today I wanted to talk about stocks again because my prior videos didn't seem to get the job done. I had sold some stock and I was excited about it earlier today, so I told a coworker and he was interested in learning more about it. So I decided to make another video about that really quick. So basically, anyone that has money can transfer funds into an account with the broker like E-Trade or Scotts-Trade or Ameritrade, and use that money to purchase stocks, these things that are called stocks, in a company. Um, Basically, you can take, okay, say you have $5,000, and you open up this account and you transfer that money into that account. Um, then you decide to purchase a certain number of shares in a company. Say that the company has the company that you're looking at has $10 a share. That means that their market value for one share is $10 at that time. So with $5,000, you'd be able to buy 500 shares. Say you purchase those 500 shares. Now you have 500 shares within that company. So one of two things can happen. Well, actually, one of three things can happen. Uh, Either the stock price will go up, or it will go down, or it will stay relatively the same. Because there's days where the stock price will just stay the same. When the market opens, uh, numbers get calculated and the values fluctuate all day. You can just take a look at the stock market anytime you want. You can Google stock prices. You can look at the major ones like the S&P 500, the Dow Jones, NASDAQ. Those basically tell you how the entire market is doing, at least in America. But um, what you want to do is buy at a lower price and then sell it when it's a higher price. Because when you sell that stock, you get all the money back into your account that you used to pay for that stock. So where that $5,000 went, that's now basically an item that you own. You own 500 shares of a certain company. Say that $10 in the stock goes up a dollar. So basically, that's 10%. So that day was a really good day because usually it doesn't go up 10% every day. It's a lot slower than that. It can go down, it can go up, depending on which company you're investing your stocks in. Um, Say it does go up a dollar. So now your 500 shares are each worth $11, which makes you have $5,500. So if you went up 10% in one day and you decided to sell that stock, then you'd be up $500 in just one day because you made 10% on your money. But that's not something that'll happen very often, but it will happen. Um, and that's probably why people want to get involved with trading stocks because it is an easy way to make money if you already have some money that you would like to invest. There are risks, though. It is basically gambling unless even if you know everything about the stock market, it's still going to be a little bit of uncertainty. You're not going to know exactly whether or not it's going to go up or down. You can't. They set it up that way. So a lot of people do invest and they lose money. Like the majority of people, I think I saw a statistic. I read a statistic in a book that a friend let me borrow on trading stocks. It's something like 97% of people that are just regular work population that are investing on their own end up losing money and just never getting it back. So it is a risky business, but basically you just have to know when to sell and basically to cut your losses or to not get greedy and gain your earnings. Um, so I mean, if you don't sell, you're not going to lose that money. I made a poor investment choice on December 10th, and I was basically locked in because I ended up at being down like 50 something percent at one point, and I just stuck with it. And today I was able to sell it at a profit. Um, I did technically lose money because I could have been using that money that was locked up for other investments. But at the end of the day, I do have more money than I did have when I first purchased in December on December 10th. So it was a pretty long streak, but finally, the stock that I was invested in ended up jumping a crazy 20% today at one point. So once I was positive, I got out of there and I got a nice chunk of money back from that I can use later on. Um, Basically, just come at me with more specific questions and I'll try to explain it. I've been trading for about almost 4 years now, so I do know a few things about how the market works, and there's just so much complexity to it. But that's just a basic overview. And I just hope that helps. And if you do want to trade, you should. You should try it. But I mean, you need to be prepared. Just like if you're gambling, don't ever use money that you think that you'll need later on for something to gamble or to trade stocks. Don't depend on it for your living unless you're like fantastic at it. Just basically consider it as gambling, and if you make some, you make some. If you lose some, you lose some. That's the mentality that you need to have going into it, or else you're setting yourself up for a major failure. All right, guys, see you tomorrow.